Patricia Nguyen had been paying her bank $16.95 every single month for 11 years. She was 67 years old, living in Hamilton, Ontario, collecting her OAS and a small workplace pension, and every month that $16.95 came off her account like clockwork. She never questioned it because nobody had ever told her she could. Then one afternoon her granddaughter sat down with her at the kitchen table, pulled up the CIBC website on a laptop, and showed her a single sentence: monthly fee waived entirely for clients aged 65 and older. 11 years. $16.95 a month. Patricia had paid over $2,200 in fees she was legally entitled to have waived, and her bank had never once mentioned it. That is the story I want you to carry with you through every minute of this video. Because Patricia is not unusual. Patricia is the rule, not the exception. There are Canadian seniors all across this country paying bills right now, every single month, that they are legally exempt from paying, or legally entitled to have significantly reduced, and the companies and government agencies that know about these exemptions are not picking up the phone to tell you. My name is Robert Marshall, and today I am going to walk you through 7 specific bills that Canadian seniors are paying in 2026 that they should not be paying, or should be paying far less of. I am going to give you the exact program names, the exact dollar amounts, and exactly what to say or where to go to stop the payments immediately. Let us start with the one that affects every single Canadian senior watching this video, regardless of income, regardless of province, regardless of how much money you have in the bank. The first bill is your monthly bank account fee. Every one of Canada's big 5 banks, TD, BMO, RBC, CIBC, and Scotiabank, offers either a full fee waiver or a meaningful fee reduction specifically for seniors, and most of them do not advertise this fact at the branch counter. At CIBC, the monthly fee on their Smart account is waived entirely for clients aged 65 and older. That means unlimited transactions, unlimited Interac e-transfers, and free paper statements, all for $0 per month. TD waives the monthly fee on their minimum checking account for clients aged 60 and older who receive a government pension. Scotiabank and BMO both offer senior discounts at age 60 on their standard checking packages. And if you are receiving the Guaranteed Income Supplement, the GIS, you are entitled under a federal commitment called the Low-Cost Account Framework to a no-fee basic checking account at any major Canadian bank, by law. That is not a promotion. That is a federal requirement. Your bank must offer it. Most GIS recipients paying monthly banking fees simply do not know this rule exists. The action here is simple. Walk into your branch, or call, and say these exact words: I am over 65. What senior discounts or fee waivers apply to my account? If they hesitate or say there are none, ask specifically about the Senior Account Program and the Low-Cost Account Commitment under the Financial Consumer Agency of Canada guidelines. The FCAC link is in the description below. The second bill is your prescription drug copayment, and this one is province-specific, but every province has a version of it. In Ontario, every resident aged 65 and older is automatically enrolled in the Ontario Drug Benefit Program the month after they turn 65. Under ODB, you pay a $100 annual deductible and then a maximum copayment of $6.11 per prescription. But here is the piece most Ontario seniors are missing. If your net income is below a certain threshold, and for a single senior in 2026, that threshold is assessed annually, you can apply for the Seniors Copayment Program, which eliminates the $100 deductible entirely and reduces your per prescription cost to just $2. Many pharmacies waive that $2 as well. In Saskatchewan, eligible seniors aged 65 and older pay a flat $25 for any eligible prescription regardless of the actual cost of the drug. In British Columbia, the BC Pharmacare Fair Pharmacare program uses a sliding income scale, and low-income seniors pay nothing at all for covered medications. If you are currently paying full retail price for prescription drugs in any province, you have not checked your provincial drug benefit program, and that oversight is costing you every single month. The action here is to call your provincial health ministry line or ask your pharmacist directly. Tell them your age and ask what provincial drug benefit programs you are automatically enrolled in, and whether you qualify for any copayment reduction programs. Do this before your next prescription is filled. But here is where it gets more compelling, and the next item is the one that shocks most Canadian seniors when they first see the actual dollar amount they have been overpaying. The third bill is your property tax. Most Canadian homeowners aged 65 and older are eligible for property tax relief programs that reduce, defer, or in some cases fully cancel a portion of their annual property tax bill, and the application rates for these programs are extraordinarily low because municipalities do not proactively notify eligible residents. In Ontario, the Ontario Senior Homeowners Property Tax Grant provides up to $500 per year directly to eligible seniors who owned and occupied their principal residence and were aged 64 or older on December 31st of the prior year. You claim it on your annual tax return through Form On-Ben, the same form used for the Ontario Trillium benefit. If you filed your 2025 tax return and did not complete the On-Ben section, you left that money on the table. In Toronto specifically, the city's property tax, water, and solid waste relief program allows eligible low-income seniors to defer property tax increases and receive rebates on water and solid waste charges. The 2026 application deadline is November 2nd. Provincially, expanded property tax relief rules that took effect this year raised the maximum annual municipal exemption from $1,000 to $2,500, lowered the qualifying age from 65 to 60, and raised the income threshold for eligible single seniors from $35,000 to $50,000. More Canadian homeowners qualify today than ever before. Fewer are claiming than ever before. I am going to give you the link to check your municipal and provincial programs in the description below. The fourth bill is one that almost nobody talks about, and it is the one that Patricia's story actually begins with: banking fees specifically tied to paper statements. Every major Canadian bank currently charges between $2 and $5 per month for paper statements, an ongoing fee that most seniors have never actively agreed to and have simply been absorbing. At CIBC, seniors 65 and older receive free paper statements as part of the Senior Account Program. At other institutions, you can request an exemption on accessibility grounds under the FCAC's Accessible Banking Guidelines. If you receive paper statements and are paying a fee for them, call your bank today and ask explicitly whether your age or any accessibility accommodation entitles you to a waiver. In most cases, a single phone call ends this fee permanently. I am going to come back with something in the next section that may be the most valuable item on this list, especially if you own your home and have done any renovation work in the last 3 years. The fifth bill is a tax you have almost certainly been paying on home renovation work that you were legally entitled to get back. The Federal Home Accessibility Tax Credit, the HATC, allows any Canadian aged 65 or older to claim up to $10,000 per year in eligible home renovation expenses directly on their federal tax return. The credit is calculated at 15% of eligible expenses, which means up to $1,500 in direct federal tax savings per year, for work you may have already done. Eligible expenses include grab bars in bathrooms, handrails on staircases, walk-in showers, wheelchair ramps, wider doorways, non-slip flooring, stair lifts, and any modification that makes your home safer or more accessible as you age. If you had any of this work done in 2023, 2024, or 2025 and did not claim the HATC on your tax return, you can file an adjustment through CRA My Account to recover credits you missed. There is no application, it is a line on your federal tax return, specifically line 31285. And there is no income limit. Every senior 65 and older who incurred eligible expenses qualifies, regardless of what they earn. There is one important 2026 update to this credit you need to know. Beginning with the 2026 tax year, the federal government has changed the rules so that the same renovation expense cannot be claimed under both the HATC and the medical expense tax credit simultaneously. For your 2025 return, the previous rules still apply and the double claim is permitted. Starting with 2026 expenses, you must choose one credit per eligible expense. For most seniors, the HATC at a flat 15% rate will be the simpler and more beneficial choice, but if your total medical expenses are very high, it is worth running both scenarios with a tax professional before filing. The sixth bill is one that surprises most Canadian seniors because they do not think of it as a bill at all, but it is money leaving their household every quarter that most are not claiming. The GST and HST credit is a federal quarterly payment from the CRA designed to offset the sales tax that lower and moderate income Canadians pay. For a single senior in 2026, the maximum annual credit is $519. For a senior couple, it is $680. The income threshold at which the credit begins phasing out is approximately $44,000 for a single person. Most Canadian seniors on fixed CPP and OAS income qualify for at least a partial credit. And it is entirely automatic, no application required, as long as you file your annual tax return. But here is where the money gets left on the table. The CRA calculates your eligibility based on your filed return. Seniors who do not file a return in any given year, even a year where they owed nothing, receive nothing. Every year you skip filing is a year the CRA pays you nothing, regardless of what you were owed. I am going to come back to this point because it connects directly to something even more significant in a moment. Stay with me, because the seventh item on this list is the one that generates the largest dollar amount of any exemption I have covered today. The seventh bill is something most Canadian seniors have been told they cannot avoid, but they can. It is the federal pension income tax, and specifically the pension income amount tax credit on line 31400 of your federal return. Any Canadian who receives eligible pension income, which after age 65 includes RRIF withdrawals, life annuity payments from a registered pension plan, or certain foreign pension income, can claim a non-refundable federal tax credit on the first $2,000 of that pension income. The credit is calculated at 15% of $2,000, which equals $300 in federal tax savings every year. In addition, if you are 65 or older and your net income is below the annual threshold, which for 2026 is $44,325, you are entitled to claim the federal age amount, a non-refundable credit on line 30100 worth up to $8,790 in eligible income reduction. At a 15% federal tax rate, that is up to $1,319 in annual federal tax savings for eligible seniors. The age amount begins phasing out at net income above $44,325 and disappears entirely at approximately $102,925. These are not complex maneuvers. These are lines on a standard federal tax return that your bank representative will never mention, that Service Canada will not call to remind you of, and that the CRA calculates automatically only if the information on your return is complete. If you have been using the same tax preparation approach for years without reviewing whether you are claiming every line you are entitled to, you are very likely leaving federal money behind every single year. Here is where all 7 of these exemptions connect into a single, coherent action. The common thread across every item I have covered today is this: these programs exist, they are funded, they are legal, and they are entirely dependent on you knowing to ask for them. Bank fees waived by asking. Drug copayments eliminated by applying. Property tax deferrals triggered by filing the right form. Home renovation credits recovered by adding a line to your tax return. GST credits maintained by filing annually. Pension income credits claimed by completing 2 lines on a form you are already submitting. The system is not designed to make this easy. The bank wants the monthly fee. The government does not send a letter listing every credit you missed. The municipality does not knock on your door with a property tax application. But every dollar in this video is your money, money that was taken from you or withheld from you, not because the law allows it, but because nobody showed you the specific place to go and the specific thing to say to stop it. Here is your action for the next 24 hours. Pull out your most recent monthly bank statement. Find your monthly account fee. Call your bank today and ask whether your age entitles you to a full or partial waiver. That single phone call, for most Canadian seniors watching this video, will end an expense that has been running unquestioned for years. Then, in the description below, I have listed the direct links for every program I covered today: provincial drug benefit programs, property tax relief applications, the HATC claim line, the FCAC banking rights page, and CRA My Account. Work through them one at a time over the next week. Every one of them is worth your time. Next week I am covering the pension income splitting strategy that Canadian senior couples are using to reduce their combined household tax bill by thousands of dollars per year, a strategy that requires no new accounts, no complex applications, and is available to any couple where one partner receives eligible pension income. That video will be one of the most practically useful I have made for married seniors. This is your money. It always has been. Now you know exactly where to find it.